Hello, welcome along. Good to have you here, Jeff.
Hi, Mark. Good to see you.
Here we are, right here in the Payden & Regal office in the City of London with the Bank of England immediately behind us. It's really good to have you back in London, Jeff.
We could not find a better setting.
Absolutely. Well, particularly with, we're going to talk econ and we're going to talk about the Payden & Regal point of view. We should explain that we are here in the middle of November at the time of recording. So we've just over a week ago had the American presidential election. So we know the outcome. We're talking post result, but pre the new presidency. So we're not going to talk about that particularly, but we are going to focus on the point of view.
On newsstands now. Pick up your copy.
And also available on online, Payden.com. You can find it on there too. So the point of view, I mean, you've been producing the point of view for years.
Almost 2 decades.
Almost 2 decades. And
what is the point of the point of view?
Well, what I love about the point of view, and this goes beyond the point of view, it goes back to the work that you do. So you are here as a chief economist, not just to spout knowledge and wisdom, but to really get behind some of the narratives that are out there and help clients make sense of what's going on in the world, but also to help strategists within their portfolio so that they're taking account of that and really understanding the nuances. So it's an important role.
Yeah. What value can economics add to investing? I think it's really finding a different perspective on things that are important for markets and, important for portfolios. So that's really what we're trying to do. Then the point of view, it has evolved over time. If you are a frequent reader of it, one thing you'd notice is it's always 3 articles and then a data visualization, or we call a centerpiece. But I think what is really changed in the last few years is the number of charts. So even if, Mark, you don't want to read, you have more charts available.
I'm a very visual guy.
Exactly.
I love the charts.
I know that about you. So there's plenty of options. So I think that's one area. But we try to be a little bit irreverent, taking on topics and giving a little bit of different perspective than people might be.
Okay. So in this edition, which has been out for a few weeks, we've got an article about California.
Yes.
General perception is people are leaving California because it's too expensive and they're moving elsewhere where it's cheaper. You have a contrary piece to that. We've also got a piece on the dollar and how on earth does that continue to be almost like the global reserve currency. Piece on that. And also artificial intelligence. It almost feels like what the world needs now is not another article on artificial intelligence, but here we have it. So we'll get into that.
Yeah.
So should we start with California?
Sure. Yeah, I mean, it is a fact that people are leaving California in droves. In fact, if you flip to figure 1 in the article, page 1, you will see data going back to the turn of the 20th century. And every year up until 2019, we had net population inflow. California was the destination, the land of milk and honey, if you would, if you wanted to go there. That's how the Clevelands ended up in California. Both of my grandparents, during the Great Depression, fled the Dust Bowl in the Midwest and came toAlifornia. So,
but interesting personal perspective.
Yeah, there you go. But now in reverse. So people are leaving and companies are leaving. So there is a sense of, I would say, doom and gloom circulating, particularly in the U.S. media. However,
and COVID and the immediate aftermath of that has been a factor in that. People have discovered that they can live within reason anywhere and still work with the companies that they worked with before.
Correct. So you could be working in Silicon Valley, but maybe you're actually situated in Reno, Colorado, or Lake Tahoe, or Colorado. Yeah. So there's definitely some element to that, but I also think the cost of living and the cost of doing business has pushed out companies as well.
So why are you excited?
Yeah, well, we always try to find a little bit different perspective. And Payden & Regal is based in downtown LA, as you know. And right down the street, really, near LAX, that wonderful airport I know you like, that you fly into on your journey over from London, there's a city called El Segundo. And there is perhaps a manufacturing renaissance underway. So, I mean, zooming out, where does growth come from? Economic growth comes from really innovation clusters. So the U.S. has been very fortunate in the last few decades to have Silicon Valley, which was
because we don't think of California as being a manufacturing destination. It's all about the tech.
Yes. But consequence of in and around El Segundo, in and around the LA airport over the last few decades, you had the aerospace industry. You had a SpaceX that sort of debuted in El Segundo. They had a facility there. I think it's now a seafood distribution center. But be that as it may, they spawned a lot of other companies. So we've, as we highlight in the article, there's a birth of hard tech. So companies that are building stuff rather than necessarily just software. And we posit that this perhaps could be another innovation hub and could be an engine of U.S. growth over the next decade or so. So it's an optimistic spin on something that's going on in the backyard, if you will, the back garden on Paid and Regal.
So the people who've been leaving are the people that we talked about whose jobs perhaps allow them to work anywhere. They become almost economic migrants or immigrants. If that's the
or they're seeking lower cost of living elsewhere.
Exactly.
Yep.
And the people who are coming in, the new jobs, is what's bringing maybe a different type of workforce into California.
Yeah, but it could be a countervailing force, if you will, adding population, adding workers back, and could be boosting growth. And we're definitely seeing this overall in the U.S. Data right now with investment CapEx spending and also build out of manufacturing facilities. So there is some sense of this. We were on the cusp of something, manufacturing renaissance.
It's interesting that you talk about hard tech, and we'll come back to that when we talk about the final article, artificial intelligence, because I think there's a really strong link there. But let's talk about the dollar. Just how are we here in the 21st century, and the US dollar is still the global reserve currency?
Well, it's been very popular in my lifetime, in my career, to pronounce or prognosticate the death of the dollar. Whether it be, the rise of the Chinese currency, or before that, the rise of the euro was going to displace the dollar.
Or Bitcoin.
Yeah, some listeners that are avid followers of cryptocurrency may be thinking that some cryptocurrency will displace the dollar. So the article actually, we go into why has the dollar endured? It's subject to all these forces. So it goes into a number of reasons, but I think my favorite, Mark, is just the dollar was not designed. I think this is maybe shocking to some people. It wasn't like they rolled out a blueprint for the dollar. This is how the dollar system is going to work and exist, and here you go. It evolved. It was an organic system over many centuries, and we posit in the article that makes the dollar more resilient, more long-lasting than perhaps might otherwise be if it was a more brittle designed system. So that's really the thrust of the article. And we do go into some data. The dollar is still being widely used, whether it be FX reserves or foreign holders of U.S. treasuries. That's at an all-time high, or just physical. I don't have any notice in my pocket of U.S. dollars, although I was just in Bermuda before here.
Yeah, and you use them there. That's for sure.
People were willing to accept them, widely. So those physical dollars actually are held globally. And that series is also at an all-time high. So
I'm sure you'd find plenty of places here that would happily accept them too.
Yeah.
So the other thing that I was fascinated about, being a student of economic and social history, is that you go into the history. You've got this piece in here, if I can find it, page 10. There you go. Did you know the history of the dollar? And I should have known this. I did bizarrely know about Bancor, which was the attempt to do exactly what you've just explained the dollar isn't, which was to create, design a global currency. John Maynard Keynes, one of his perhaps least successful ideas. But the history of the dollar, fascinating. I would heartily recommend that you read that, if nothing else, about that particular article.
Usually if we find something, well, what happens, I think, with the point of view is maybe we read a book. And in this case, we were looking at a book that is out of print now. It was written in 1957, and it was about the history of the dollar. And, that sparked the interest in writing the article. So it's digging into things like that. And one thing in the book brought out that we highlighted in the Did You Know box is that the dollar predates the founding of the United States. There was the American colonies, and the British were restricting the use of the issuance of coinage and paper currency. And what the colonies ended up doing to, grease the wheels of commerce, if you will, or they were using the Spanish dollar. And so over time that evolved into the US dollar. And so we talk about that. So it really is an evolving organic system that's quite resilient, I think. And so I apologize. I think the dollar's going to be with us for some time to come.
Okay.
Yeah.
And maybe AI will be as well if we believe what you write about in your third article. And for many people, it feels like the initial exuberance that went into the internet back in the 1990s that led to the bust in 2000. A lot of money that's gone into AI, a lot of investment that's gone into it. Are people going to get their money back? What is it about AI that excites you?
Well, one thing we like to do in the point of view, almost every publication has some element of this, is I would say amateur financial historian work, right? We like to go back and find historical analogs that might confer some information for us on the present circumstances. So the thing that really does strike us is in the late 1990s, something happened, something clicked, and everyone said, wait a second, this internet thing is going to be big. Millions of people will be online, if not billions, in a very short period of time. We need to build out a massive amount of telecom infrastructure to facilitate that. And you had a lot of CapEx in the late 1990s that went into building that. Now, as you well know, everyone knows, that build out was too much, too soon. It was too exuberant, right?
And it wasn't necessarily especially helpful. I remember being very excited about the internet and everyone having their websites, and brochures were online and there were things that you could browse through, but there wasn't a lot that you could actually do. And that was one of the things. I mean, there were some initial, lastminute.com, for example, which was a classic boom and then struggle story. But a lot of it relied, a lot of the growth, the eventual success relied on the development of other things like smartphones.
Yep, smartphones, the bandwidth enabled video, so you had YouTube and the launch of social media and online shop. All that stuff came later, but not initially, right? So you just had too much infrastructure built out too soon. It took more than a decade really for all that to be absorbed. So in the interim, you had the bust, the dot-com bust of the 2000s. Profits didn't meet expectations, stocks plunged, and you had the recession. You had layoffs. So the analogy to the present would be, well, we do have a similar thing. ChatGPT came out. People realized, oh, this artificial intelligence thing could be quite useful. Not exactly sure.
Right, there's a great graph in here about the adoption of ChatGPT versus all the other things that you charted here, like the use of personal computers. And have a look at this chart.
So that's figure 1 in article.
Figure 1, article 3, page 11.
Yeah,
it's just extraordinary how fast,
how rapid
that adoption has been.
But a similar, we look at the numbers in the article, and in inflation adjusted terms, the amount of capital going into infrastructure build out for AI is quite similar to what we saw in the late 1990s. And we leave it to the reader to decide, is it a similar story where you're building out a lot of infrastructure, not exactly sure how it will all be used. Maybe it's too much too soon, and we'll have a bit of a disillusionment a la the 1990s.
So I hope that's given you some insight into what is out there right now in the current edition. In the current edition, go on online or look at your hard copy and see for yourself and form your own judgments. And we're always interested to hear your feedback. Brilliant having you here, Jeffrey. And
my pleasure.
Next time.
On newsstands.
Feedback, always welcome, and see you next time.